Okay, welcome to the Chapter 11 Cash Control and Banking Activities presentation lecture. Please make sure that you have demo problems available to you as you go through this material, as well as the Chapter 11 notes. Cash control systems is basically going to be protecting cash through testing and confirming that our bank statements and our checkbook balances from our account. And then also we want to also protect cash from loss, waste, theft, forgery, and even embezzlement. And these activities that we're going to be doing, these processes, are ways of trying to catch that if it is indeed happening. So we have, within our protecting of cash, we have internal controls. Our internal controls limit the number of people handling the cash. So only certain amounts of people are going to handle cash, because the more people who handle it, the more opportunity there is for cash to be missing. Have one person handle all receipts and payments, and another person keeps accounting records. So breaking these tasks up with two different people will help keep one another accountable, and also, if there is an issue, know who to go to and who to address if there is an issue with the cash not checking out the way that it is supposed to. Ensuring employees who handle cash. Using a cash register and a safe. Picture yourself in a service business. Anybody who is checking people out is utilizing a cash register to do so, collecting cash, giving change, and that particular employee then is responsible for that cash drawer checking out and coming out, checking out the way that it is supposed to, with the number of monies going in and coming out during the course of a shift. Depositing cash receipts in the bank daily, normally reserved for a manager of a business who does this at the end of a shift or at the end of a day. Using checks to make all cash payments. Whenever cash is paid, a check is written. We know this based off of some of our source documents and transaction clues that we have transacted in the past, in which a check was our source document. All right, so continuing on, external controls. Verifying the accuracy of signatures. Signature cards, you'll see different banks will do this. You might have to do this when you open up a checking account. Verify your signature and verify for any type of cash activity coming out of your account. Maintaining records of monetary transactions. I'm going to go back on that just a second. Maintaining records of monetary transactions. So basically comes down to good record keeping. And that is exactly what accounting is keeping track of all monetary records and keeping track of them well and very organized. And also using the proofs and the checks that are available within the accounting cycle process to determine whether or not we have errors and if the money does check out. If you're going to open a checking account allows a person to deposit cash in a bank and write checks against the account balance. Chances are some of you have checking accounts and have experience using this. But basically, this is the account that we use. The checking account is how we value our cash value at the particular point in the accounting cycle. Cash going out, cash coming in. The depositor, a person or business that has cash on a deposit in a bank. This is the person making the deposit. So that would be you or the account holder or the account executive of the checking account. If you're going to open a checking account, you have a check. This is a written order from a depositor telling the bank to pay a stated amount of cash to the person named on the check. So pay to the order of, that's where the money gets sent. That's who gets paid based off of the check being written to that particular person or organization. The signature card. Cards will contain the signatures of person or persons that are authorized to write checks from the particular account. Here's an example of a signature card where we have this. In this case, we have one signature. Maria Sanchez is authorized for making signatures regarding this checking account. We do have the ability to have maybe one, maybe two more associated with this account, but at this point we have just the one. Checkbook. This is a packaged or printed checks. Sometimes they come, most of them now come with carbon copies in the back so that the record of payment or record of deposit can be recorded. Check stubs will also appear on the left, especially for business checking accounts and business checkbooks, to keep track of where their money is indeed going. This is an example of a business checkbook. Notice that this part right here, this is the writing of the check as to who is to be paid. And this check stub here is maintaining of records for the business who is doing the payments to determine the balance of the checks as checks are being paid and as deposits come in. ABA number, American Bankers Association number, shown as a fractional number, is printed in the upper right-hand corner. So right here, this is the ABA number. This is for record-keeping purposes of the bank when a check is written and it is submitted for payment. Right there it is. In this case, it's 71-627 and then /3222. The ABA number above the line indicates numbers or codes for the city or state where the bank is located in specific bank. And underneath that, the number below, that's the Federal Reserve District where the bank is located. Number codes indicating different financial institutions. Now, making deposits into a checking account is done using a deposit slip. You need to give both the bank and depositor record of the deposit. So for this is an example of a deposit slip. Notice the date, in which case the transaction is to take place. And now we write on the deposit slip what is being deposited. We're going to have $48.69 of cash, and then we are going to deposit 2 checks, one for $300 and one for $250. This is most likely money that has come in from some of our customers, and now we are depositing it into our checking account. Let's take a look at demo problem 11.1, making deposits to a checking account. The deposit slip, after completing, arrange the checks behind the slip in order that they are written on the slip. Let me go back for a second. So if you follow this procedure, this is going to help you organize all of your documents so that you can make the deposits and write the checks out accordingly. Endorsing the check. The endorsement, if authorized signature written or stamped on the back of the check representing a promise to pay. There are a number of different endorsements that can be used. There is a blank endorsement. There is also a special endorsement and a restricted endorsement. These are 3 very, very common endorsements to use. Transfers ownership of the check to the bank. So no longer do you have control of the money. It is now in the bank's hands and they are responsible for payment. A restrictive endorsement, most used, the type of endorsement of a business, it limits how the check can be handled. So for this case, for deposit only, Roadrunner delivery service. This means that the cash, or I'm sorry, not the cash, but this check can only be deposited. It cannot be cashed. So the money is going to get immediately deposited to the person who's being paid. No handling of the cash by any individual. Check stubs in the checkbook are a record of cash in the bank account. So in order for cash to be manipulated, the cash balance to be changed, we would have 3 different actions that could take place: payments, deposits, service charges. So on the stub for a particular period, we might have balance. Well, first we're going to have the balance brought forward from the previous check stub. We are going to add in any deposits that we might have had over that time frame. In this case, $200 deposit on 10/14, a $1,200 deposit on 10/15. That gives us our new total of $23,050. That is our new balance of cash. Now, moving on, we write the check. Important rules is to write in ink or type. Complete the check stub before writing the check so you don't forget the amount of the check. So here's that check stub that we had started, and we have the balance brought forward. Here's the deposits. Then we are going to write a check out for $700, giving us a new balance to be carried forward on the next stub of $22,350. That number then gets carried over to the next check stub for the next set of actions taking place that are going to affect the cash account: deposits, checks, service charges, etc., etc. The check then can be written out to the party it needs to be paid. First of all, the date, October 16th, current year. Paid to the order of Tooley and Company Management for the amount of $700. Then it is written out $700 and no cents, no pennies, no change. It is finally signed then by the authorized signature of the person who has the authority to adjust this account with payments and deposits. Voiding a check. If a check is written in error, You must write void on the check across the check and check stub. Check is never destroyed. It is filed with business records. This is very, very important to do if you are going to try and stop payment on a check. Make sure that you void it and follow these steps. Demo problem 11.2 we will do in class tomorrow. The bank statement. The bank statement is record of the transaction that took place within the cash account over the course of the month. It is an itemized record of all the transactions over a given period. It's going to include the balance at the start of the period, all deposits and checks, all other deductions, and also funding and ending balance on that particular account. Now the bank statement is going to give us a number of transactions that have cleared the bank over the course of the month. They are listed in columns, in this column for checks and debits, and in this column for deposits or other credits. And then on this side, we have the ending balance. And then this is the ending balance as of the end of this month, according to the bank and all the deposits and checks that have cleared. Now, canceled checks, these are checks that are returned with the statement usually marked as paid. We then have to reconcile the bank statement, which is going to determine whether or not our numbers are going to match out for ending balances, considering outstanding checks, outstanding deposits, and bank charges. Outstanding checks and deposits are checks and deposits that we have written, that we have accounted for in our records, but have not yet cleared the bank. So we have to do a math calculation to determine whether or not the balances are going to equal each other, and also take into consideration any bank charges that are included on that statement. Outstanding checks, checks that are not yet received by the bank. Outstanding deposits, deposits that have been recorded in the checkbook but do not appear on the statement. That's what it means by outstanding, not appearing on the bank statement. So in this case, we have a service charge we are recording. We have $8 coming out as a service charge, could be for ATM fees, could be for any number of things that the bank charges. We have to account for this in our check stubs and update our account. Bank service charge is the fee the bank charges for maintaining our records, and it needs to be recorded in the checkbook in order to keep our records accurate. This transaction then has to be journalized because it is not one that has been journalized based off of payment to another party. This is one that is coming from our bank. So after we are notified of it on our statement, we have to go to the general journal and transact it. We transact it as a debit to miscellaneous expense and a credit to cash. Got to record it, then you have to post it. Reconciling the bank statement. The bank statement is going to be used as a reconciliation form, in which case we use this. We have the outstanding checks. We also have the balance. Totaling of lines 3 and 4 is right here. And then finally entering the outstanding checks, doing the math to determine whether or not we have an equal balance from what the statement says and from what our account records indicate. Special banking procedures, stop payment on a check, demand by the business that the bank not honor a certain check. You must write then stop payment on the check stub, write the check amount on the on the next unused check stub. So updating the records in the books as well as notifying the bank. Here's an example, check stub for stop check, stop payment. Then the next one, we put that in there and we indicate that we have a stop payment on a check. We include that, add that back into the balance. NSF check, which means not sufficient funds, which means that a check was cashed. However, there was not enough funds in order for the check to be honored. Therefore, it's also known as called a check bouncing. Journal entry does have to be made to record the returned check. So in this case, accounts receivable Burton Company, $450, cash and bank credit, $450. NSF, not sufficient funds check. EFTs, which are also known as electronic funds transfers. These are your ATM transactions and transactions that are done without a person helping you access your funds. And that concludes the presentation lecture for Chapter 11. Please make sure that you go through and review the documents so that you're prepared for class tomorrow. next time we meet.